Hello and welcome. Today is Wednesday. It is the fourth day of June 2014. My name is Derek and today's video will be on the base metal of nickel. Currently trading at around 19,400 a ton, working out to about 870 or so per pound in US dollars. If you are interested in purchasing nickel coins, stay tuned to the end of the video as I have a few that are for sale. So let's take a look at the analysis. Don't quite have 100 periods for the quarterly time frame, but enough to show a good indication for what the chart is showing. Very volatile. First of all, we've seen moves of significant proportions. The breakout, of course, below 5,000, the resistance or the top over 50,000, greater than 10 times. Our current gain for the quarter is set at 21 2/3% right now. And the size of the green candle is fairly average, so it's not like it's a big gain for the quarter, it's fairly regular. The volatility per quarter, 31 2/3%, so big moves that play through with this chart. And if we were to tune back to the early 2000s, and I'm talking about chart analysis only knowing and seeing, say, up to here, right around 8,000. If that's all I knew at the time, what would I be stating? Well, I'd be talking about Fibonacci from this high to this low. After all, we hit this area twice. We hit this area twice. Enough to indicate what the range is, about 10,000 to 3,750. I would have calculated Fibonacci retracement, which would have worked out somewhere around here. Therefore, because of this higher low, the fact that it did not come down to the support level to make a double bottom, I would have stated possible failed breakdown, fast move upside. Obviously, that was the case, but what I also would have stated is that it got by the 61.8% Fibonacci level. I'm looking for a run and a test of this previous resistance twice hit. This test did pass with flying colors, for it had a significant break up to about 17,000, so about 65-70% gain. This period here, it came right back down to previous resistance. So resistance becoming support, and huge resistance was established. And I've also stated within this, when you want to look for good indications, you want to have resistance set up, at support back in the band, and then break resistance. There's the case of the break. Again, from an triple almost, 200%. Decent size move, which of course currently is our top at 54,200. And the selling was quite massive. It had a little bit of support at this band, and it wasn't much, but the move is over 50,000 down below 10,000. That's over 5 times its deviance. So significantly sized and placed move. Possible huge failed breakdown, which of course indicate fast move to the upside. But before we go towards more on that, we can see that it didn't find support on Fibonacci 1. It did find support on at least 2 occasions on Fibonacci 2. This period here came down to the level but closed a little bit higher. The period came back down, and there's the move towards the upside. That the band here was support. Didn't support it well, obviously changed the direction of the trend. And within Fibonacci, when you're above here, I look at this as bullish, I look at this as neutral, and I look at this as bearish. And for a move to fail, the second Fibonacci line has to fail, thus be resistance, significant break below, then the move has failed. So far, because it has held point A to point B, still in place, has not failed as of yet. The direction right now is at the upper part in here. So here we are bullish, we go neutral, trying to break neutrality, looking to go bullish, not quite, so back to neutrality. Resistance has been established, and resistance is right here, roughly at around 26,000. Therefore, any moves that does bring this up towards this point will start to see this band flatten out, and of course significant ones would make it go higher. Breaking above it, this running average from this low, which has been going up most of the time, will start to increase a lot more, and we can start talking about having tests of this previous high. Now what I want to do now is adjust the Fibonacci retracement. Right now we have it from this low to this high. So instead of this low, let's adjust it to this low instead. And we'll bring up the new lines now. And from this point here, it rallied to here. Fibonacci 2. So far, point A to point B has not failed. So this rally hasn't failed, this sell-off hasn't failed as of yet. And when we have a situation where you make this higher low, sort of like in here, and to start to bring some momentum and rhythm into play, then this band from this high, which was resisted and resisting again, would start to go sideways. It's got to get above it, really hold, stay above here, go sideways. Start to make some breaks above here, then it's going to start to go higher, and that would now be an area where you would ideally, let's just draw the band out a bit more, like to go up and then back down to the band and then some sort of move like that, but resistance has been established within here. Having a clear break above that level would then state, well, looks like we're going to have a test of this key point here. But whenever you have the huge move, like you had from here to here, you then ask the question, well, what's going to be taken out next? This level or this level? And if you believe that the level is going to be higher, then you're looking for long opportunities. If you think it's going to be on the lower side, you look for short opportunities. Now, in acquiring these coins from the US and Canadian coins that you can get every day, the United States nickels, the 5-cent pieces, practically every single year, contain 25% nickel and 75% copper, which currently makes them trading, or at basically mint and melt is about the same right now. For Canada, it's a lot different. The 5-cent pieces that span up to the year 1981 contain 99% nickel. Very good coins. If you get the coins from 1982 to most coins in 2000, but definitely to 1999, then you're getting the same as the United States, 75% copper, 25% nickel. Still good values. But even the 25 and 10-cent pieces from the post-silver era, 1968 to 1999, contain 99% nickel. Trading, the melt value is lower than the mint value at this stage, but there's definitely upside potential that come within the coins. And I was looking yesterday because I was interested how many people, what's the going rate for these coins, and I really didn't find any sellers whatsoever. I'm kind of interested in getting rid of a few that I have in the hopes or the wanting of increasing silver supply or trading nickel for that of silver and then buying silver instead. And the ones that I have available are the 1981s that I talk about, my coins before then. I have about 20 pounds or so. I don't mind liquidating them all. The shipping on these, it's going to be quite decent. I would guess like 20 if you're close to my area, and then more if you're in the United States or Europe or in other provinces. But a 17-pound jar for $3.75, that works out to 25 cents for 15 pounds, and then you get like 2 extra pounds on top for free. That's the way I look at it. Or a roll for $10. That's, again, 25 cents per coin. The 82 to 2000 lower because they're not as good of coins, but I got about 38 to 40 pounds of them, so I have a lot to sell if anyone is interested in them. That's a little pricey, some might state, but you got coins that would have a $2 mint value at the lowest, and then the upside potential, who knows how big it could go, as we have seen, of course, with the silver coins. The 25 and 10 cent pieces don't got quite as many. I got a couple dozen, up around maybe 20 or 25 rolls of each that would be available. And on the bottom, a numismatic coin, which is from 1967, a roll of, you get 40 rabbits. They're very rare, nice looking coins, and 3 times higher than the normal one. I got 2 rolls, but I only want to liquidate 1. And if you're interested, please send me an email at endlessmountain2008@yahoo.ca, and I'll talk to you all later on. Have yourself a great day. Bye-bye.